Hey traders, what's going on? Jamie Saettele here. It is April 16th, 2017. Market just opened here on Easter Sunday, and the biggest thing I want to highlight just a few things. I want to do a short video, short update. Again, it's Easter Sunday, so I want to do a short update. But we had a major development happen with the gold market on Friday. This line right here is the 2011-2012 trend line, and we had a decisive weekly close above it. That's a big deal, all right? Look, we closed above it twice on two different occasions in 2016, back in July and September, all right? But nowhere near as decisively as we just closed above it last Friday, right on the highs. And we've actually opened here with a gap higher. Big deal, right? Because you can make actually a new uptrend channel with the lows from 2015, 2016, extend the parallel off of the high from 2016, and then the center line, which gives you a great point of reference, okay, for the move higher or for the channel. That's exactly where we're trading right now. Now, a lot of times what happens when you have a new channel like this and you meet the new uptrend channel, and this is the first time we've met the new center of the uptrend channel, right? Since you can make those points. A lot of times what happens is you will see a period of consolidation. It won't always be as perfect as what happened back here, where you meet the new downtrend channel center line and you bounce for 4 or 5 weeks, and then you crash into the lower parallel and bounce. But we're above it right here as I'm doing this video. But what I would be looking for is a period of consolidation. Maybe not from exactly right here. Gold's currently trading 1294 and a quarter. Maybe up at 1307 and a half. So 1307.50, which is a big horizontal level. You've got the January 2015 high and the January 2011 low right there. Okay, but I will be looking for a period of consolidation and then a surge in gold to the upside into July, and maybe even into a high at some point in July. And here's why. The symmetry and timing is spectacular when it comes to what happened in 2011 and 2012. All right, 2011 high, 2012 high are 56 weeks apart. 2015 low, 2016 low, 54 weeks apart. The crash low, if you will, call it that, in 2013 is 84 weeks from the high. If we go 84 weeks from the low in December 2015, we actually get to mid-July of 2017, which happens to also be two equal legs up in price and the upper channel at the exact same time. Right, so I can actually do this with a copying price action and doing a mirror image of it. And again, it does not mean this is going to happen, but you have to have this marked down as a major possibility. So you can see that the low line up, maybe going into a surge at some point into July. And it fits very well with the price action that we're seeing in the market, trading around the median line, maybe consolidating for 4 to 5 weeks, and then just going absolutely nuts on the upside. So when we're looking at gold, obviously we have to consider Japanese yen, right? So with dollar yen, we're going to go real simple here. I just want to look back at a daily chart, scroll back a bit. Because look, as you know, with the updates that we did over the last couple of weeks, I thought dollar yen was actually going to get a bounce. After the NFP Friday, we had that reversal. I thought we were going to go up towards 112.80 or so, and then turn over at the 25 line, and then do the move down. Well, as it happened, we just went straight down, and here we are, basically right, at or just under what you consider the corrective channel. So what we need to do then is turn it into the pitchfork, right? And that has us right at the median line. And there's a great risk when you're at a median line that you consolidate around it and then just kind of, the bottom falls out. So there's two horizontal levels to pay attention to with dollar yen. 106.60 is a really big one. Okay, that's the post-election gap. So the election was right here. Okay, and then that was a Thursday, that was a Friday, the close. That's still an uncovered close right there at 106.60. And actually, if you take a fib of the entire move from Brexit to the high in January, it's right at the same. It's the same level. So 106.50, 106.60, huge dollar yen level to know. The other level to know actually goes back a bit further, and it's 105. Kind of call it 105.20, 105.40. High from January 2014, low from October 2014, which is right before the BOJ went nuts, right here. Okay. Also ended up being support back last year in 2016 in May. So, two really huge levels to know is 105.20.40 and 106.60. All right. So from a trading standpoint, what I would do right here, I don't really want to do anything. But with gold trading where it is, right on the median line, and dollar yen trading where it is, the best thing to do here, from my standpoint, or the way I look at things, is to just kind of sit, wait it out. Because if you get a bounce here, you're going to want to look for resistance in dollar yen. All right. And we'll map that out as it plays out. If you get a corrective rally from here because you're on the median line, then great. Over the weekend, I was thinking, well, if we do gap through the median line on the Sunday Open, then you're in the kind of scenario where you'd be looking for a crash low at one of these levels over the next couple of days. But since we have not done that, then what I will be looking for is a corrective bounce from here. And, to turn bearish, to sell. Get short, to target one of these levels or maybe both. If, however, the market does not bounce, if dollar yen does not bounce here, if we are leaking lower and we just kind of spill over the next couple of days, you'd actually be looking for panic lows at either 106.60 or 105.30.40, right? Over the next couple of days. And these would be short-term trades, right? Look, the trend is lower right now in dollar yen. And I do think that the trend is lower in dollar. Just real quick. Let's see here. Am I looking for? Wrong. I do think that there are great opportunities, on the short side in the dollar. So look back to the last update that we had with Aussie dollar and dollar yen, or Aussie dollar and Kiwi dollar, excuse me. Aussie dollar, we have a trend break on the short term, and potentially could be the beginning of upside acceleration on the bigger picture charts. Okay, dollar CAD is one obviously that we were short last week, and we'll revisit that as price action unfolds. Kiwi dollar, New Zealand against US, we've come off of a good support, and if we get any sort of back and fill over the next couple of days, we should probably be looking to buy that. So generally speaking, my bias is short US dollars. But the most interesting thing to me right now is what happens with gold and dollar yen over the next couple of days. All right. So again, no immediate trade plan on those two things, but there are some huge levels to watch. 1307, generally thinking that we back and fill for 4 to 5 weeks in gold, and then we go a lot higher. With dollar yen, generally thinking that if we break, below this median line, then you probably get an opportunity for a short-term trade, on a panic low at either 106.60 or 105.20.40. If, and this would be the better scenario, if you get, some sort of a drift higher in dollar yen over the next couple of days, the better opportunity is going to be to sell that for the eventual break. All right. All right. So I'm going to leave it there. Again, Jamie Saettele here signing off with SB Trade Desk on Easter Sunday, April 16th, 2017. Take care.